photo, excuse me, the selfie. So I normally will do a countdown. If you guys want to do a selfie on your end as well, you can do that. And that way we can make sure everyone's got their makeup on and they're looking their best. So 3, 2, 1, salud. Thanks for doing that. And what I normally do is I'll put that on LinkedIn and I'll tag the people that are here, unless you tell me you don't want to be tagged, and I won't tag you. And that way it just kind of gets a little bit of exposure, and then it allows for some additional networking on LinkedIn. So that's always good. So without further ado, I think we can get started with our guest speaker. And Olga Vodolazschi is joining us today. She is the founder of OV Law Group LLC, and they specialize in advising individuals, corporations, family offices, and trust companies on U.S. tax matters, including real estate structuring, pre-immigration tax planning, estate planning, and tax compliance. Olga's going to discuss tonight some key things to know when working with foreign investors. And there's two ways to kind of look at this. It's you know, when we work with U.S. people now, we have to kind of teach them about some of the ways that they can invest in multifamily deals. Just because they're here, there are things we have to still go through 1031 exchange, you know, investing through your 401k or your SDIRA. There's a lot of things, you know, a lot of ways that people can invest and they don't know it. And I think the same applies to foreign investors. There's foreign investors that want to invest in the U.S. And the more we know about how to help them and maybe how to refer them to people like Olga that can kind of get them started with the creation of their organization, the more that will allow them to invest and the more capital that brings us. So I think it's a win all around. So with that said, Olga, I'll turn it over to you and I'll go ahead and manage the presentation here like you asked, and we'll go from there.
Sure, great. Thank you so much, Ray, for having me, and thank you for the introduction, and I hope the session will be informative to everybody. And please, if somebody has questions, do chime in, because I think it's easier, you know, to clarify any doubts during the call than to have any doubts left for the end. And as Ray mentioned, I do have a tax advisory firm. I'm located here in Miami, in South Florida. And I advise foreign individuals, entities, whether it's corporations, family offices, just family businesses, to invest in real estate or to form entities, subsidiaries here to start their presence here in the US. And with that, obviously, come all the questions regarding taxes, right? What would be, how am I treated in the US? How does it affect me in my local jurisdiction? How can you help me organize all my assets abroad and here in the US, and so on and so forth. So I thought for tonight's presentation, we'll just go over some general concepts that usually apply to all foreigners, and then specifically go into 4 typical structures that foreigners use to invest in real estate here. So we'll just jump right into the first question. If you can continue, Ray, to the slide about, yes. So the first question is, you know, we talk about foreign investors. So who is a foreign investor from a tax perspective? So we have the foreign individual, let's start with that, and then we have the entity. So the foreign individual, from a tax point of view, there are 3 ways to become, to be classified as a non-resident alien for tax purposes. So you either, or what is it to be, how do you qualify to be a tax resident in the US? So there's either, you either have a green card in the US, you either have a US passport, or you either exceed the days, which is 183 days in the US. So basically, if an individual does not fall in any of those 3 categories, he or she is considered a foreign investor, which would be a foreign non-resident alien, using the lingo from the tax code. So if we have that foreign investor, then the next question is, how is he or she taxed in the US? But before we get to that, I mentioned that there's the individual investor, and then we have the entity investor. When I say entity, I mean it can be a foreign company, it can be a partnership, it can be a trust that can also invest on behalf of a family in the US. So all of those, if they're formed in a foreign jurisdiction, then obviously that would be a foreign investor, and that would be a non-resident alien for US tax purposes. Right, so once we identified who is our foreign investor, then the next question is, how would they be taxed in the US? And there are two ways that foreigners are taxed in the US. They're either taxed on what we call the passive income, which would be the dividends, for example, from a real estate fund, or it's interest if they just have a portfolio, an investment portfolio in the US, royalties if there's some business that they have here. So those would be the passive income for foreigners, and that is withheld at the source at 30%, unless those investors come from a jurisdiction from which the US has a tax treaty. So, by virtue of our location here in Florida, we have a lot of Latin American investors, for example. So from Latin American jurisdictions, there are only two with which the US has a tax treaty. There's the Venezuela and Mexico. So if there is an investor from that jurisdiction, it's important to know that, because there could be much more beneficial rates for them versus that 30% that I mentioned, the general rule of withholding on passive income. So that is that first category, the passive income. And then there's the other category, which is called the effectively connected income for foreigners. So think of that as your typical foreigner who is investing, in real estate here. The real estate is generating income. So that's active income for him or her. And that income would be taxed, if we're talking about individuals, it would be taxed at rates as I or Ray would be taxed in the US, right? Those would be the ordinary rates, which would apply to foreign investors. And same would apply if it's a corporate investor. It would be the corporate rate that currently is 21%. Let's say to when, right? But currently it's 21%. So those are sort of the general two categories of income that would be subject to tax to foreigners. So with that in mind, with those general concepts, if we can go to the first, the most basic structure of investing in US. So we have our NRA, who is the non-resident alien, who, just as a reminder, does not hold a green card, is not a US citizen, and does not exceed 183 days in the US. That person is investing in US directly, right? He or she holds a property or an interest in a real estate fund, or whatever the real estate investment is, they hold it directly, or they hold it through an LLC. Why I say that those are the same? Because a limited liability company, from tax point of view in the US, is considered transparent by default if that person holds it directly, meaning that whatever income is being generated by the real estate investment flows directly to the individual, to his or her tax return. So there is an important point here to keep in mind when a foreigner invests directly. Is one big disadvantage is that they're exposed to estate tax, they have estate tax exposure. So all of us who are US citizens, US tax residents, we have exemption from estate taxes of $11 million. So that was increased by Trump through the Trump reform that happened a few years ago in 2017. But foreigners do not have that high of an exemption. They only have 60,000 exemption. So what does that mean? So let's say if we have Mr. X from Mexico who is investing in some real estate in the US, if something happens to him and he passes away while holding this property in the US, and at the time of his death, the property is worth $1 million, let's assume, then he would be exposed to estate tax on $940,000, right? Which would exceed his exemption. And the tax is quite steep. It's about 40%. So whoever his beneficiaries would be, those at the end of the day would have to carry the burden of estate tax. So that is the biggest disadvantage when foreigners invest directly in any assets of US source, which in our case specifically would be real estate. Another disadvantage, which you can see it as a disadvantage or not, but when I work with foreign investors from Latin America, there's always the concern of privacy or political issues. So they sometimes do not prefer to file a tax return in their personal name, which would be the case in this situation. Then also, if this person sells the property or his real estate interest in a partnership that holds real estate investments in the US, there is a concept which is called FIRPTA, which stands for Foreign Investments in Real Property Act. It was a law passed in 1980s. It's basically an accountability mechanism, because what was going on in the 80s is that foreigners would come, they would invest, they would sell the property, they would cash out, and they would leave. And there was no tax paid, nothing. So basically IRS was at a disadvantage. So FIRPTA is a withholding mechanism. So when you have a foreign seller, whether it's an individual, as it is in this scenario, or if it's a foreign company, or if it's a foreign partnership, or if it's a foreign trust, all of those are called the foreign seller. So that foreign seller would be subject to 15% withholding on the fair market value of the property. So it's automatically done. I mean, title companies usually know that. So they automatically withhold the 50%. And what happens is that if the gain on the actual sale of the property is less than this 15%, you can get back as a refund, the difference. If the gain is more than 50%, then the seller has to pay additional funds. This is, again, the general rule. When I work with foreigners, it is always beneficial to know about this transaction prior to it actually closing, because there's a mechanism to make sure that the foreigner pays exactly what he owes to IRS, and not to have to withhold the 15% from the fair market value, right? Because at the end of the day, it's a liquidity issue for a foreigner. Because if this 15% is withheld, then they have to wait for a whole year till they file the tax return, and then it can take up to another 6 months till you actually get the refund. So it's important to know this concept when we have foreign investors, and to advise them properly, before they decide to go ahead with the sale transaction. So those are the disadvantages. I mean, the advantage is that we obviously have only one level of tax. And if the foreigner sells the property, then he or she would be subject to the same tax that all of us would be. There would be the capital gains on the gain from the sale. And it's a cost-efficient structure because there's no maintenance for any entity, or if he or she has an LLC, the costs are minimum. If it's a Florida LLC, then they just log on to SunViz and do the annual maintenance of the entity. So again, it's a cost-efficient structure, but the cost is high if we talk about the state taxes and about potential FIRPTA if it is not done properly, and then there's the liquidity issue that I mentioned. So if there are no questions on this option, I think we can move on to the next one. So the other typical structure is we have the corporate investment, right? So we don't have anymore the individual investing, but we have the entity investing. So here we have our foreigner who holds an FT, the foreign corporation, and then let's assume they invest in various real estate properties, the sort of various projects, right? So there's a entity per each. There's the US Corp that holds, I don't know, single use, and another holds multi-use, or whatever the investment might be in the US. So if we go for the advantages of this structure, the biggest one is that our foreign investor is protected from estate tax purposes. Because in this scenario, our foreigner does not hold any US real estate directly. So what he or she holds is shares of a foreign entity. So there's that foreign blocker. So if something happens to him or her, or if we have a set of foreign investors, they will be protected, and at the death, they are holding the shares of this foreign company. In addition, there's the anonymity issue that also the client would not be exposed because they don't have to file a tax return in the US, so there's no need to apply for a tax ID and to file the required return. Also, the concept of FIRPTA that I mentioned on the prior slide does not apply. Why? Because here the seller would not be a foreigner, but here the seller would be a US entity, right? Because the title holder, the holder of the property is a US corporation and not a foreign entity or individual. But of course, there are disadvantages also to this structure. The biggest one is that here there's a double level of taxation. What does that mean? If this US corporation is holding a rental property or is holding an interest in a real estate fund, that company is subject to tax on its level, right? Which would be the corporate tax, which is 21%. If it's a Florida company, there's the state income tax, which is another 5.5%. But then if there's a distribution of dividends from the US Corp to our foreign entity, remember this would be the passive income, right, that I mentioned in the beginning. So this passive income would be subject to that withholding of 30%. Unless, for example, in this case, the foreign company is situated in Mexico and Spain, and in some kind of jurisdiction with which US has a tax treaty, and then this 30% can be lowered. And then we have to look in the tax treaty what would be the specific tax rate. This tax rate usually go down to 10%, 15%, depending on the jurisdiction. So that's the biggest disadvantage, right? That we have here double taxation. However, there are ways to mitigate the second level of tax. Let's assume we have our property under US Corp, under one of these US Corps, and US Corp sells the property. So if US Corp sells the property and then liquidates immediately, that would be what is called a liquidating dividend. So when there's a liquidating dividend, this 30% does not apply. So there we're back to the one level of tax. So there's certain strategies that we can discuss with the client. Obviously, it's a more expensive structure to maintain because there's so many, depending again on the amount of the investments. But there is a tax return per entity. So each US Corp would have to file its own tax return. So, somebody would ask, why do we need to have, 3 separate companies? Why can't we just put all properties under one company, right? So it also depends what are the type of investments. Sometimes it has nothing to do with taxes. It's more of a liability issue, right? We don't want to put all of our eggs in one basket. So it's always good to sort of separate an investment per entity. If we have tenants, right, there are all this, could be tenant litigations. just more for legal purposes, it's advisable to separate an investment per entity. Another issue, another disadvantage is that the last point in the disadvantages is that losses from one project cannot be offset with another. So if Ray, please, you can go to the next slide. That is sort of the advantage of this structure, right? Because it's very similar to the prior one, but in this case, the big difference is that we have the US Corp, which is holding the same US entities, the investment per company, but here these companies are not treated as corporations. They are left as disregarded entities. So what does that mean? So if we have an investment that is generating losses and another one is generating income, you can actually offset it, and it's all going to flow up to US Corp that will file that one tax return for all of them, right? So that is the big advantage of this structure. Of course, there are disadvantages to this. If we go back to that, to the 30% withholding when we send the dividends to the foreign company, here, unless you sell all of the properties and then you liquidate US Corp, that's the only way to mitigate the 30% withholding. So again, it sort of depends from, from situation and from case to case, from, what the client is investing in. I always ask clients, what is your long-term plan with this property? So with the investment, are you going to hold it? Are you going to improve it? Are you going to sell it? I mean, what is the plan for the future? And sort of based on that, we can come up with the best structure. So here, but yes, we're back to the same double level of tax. I mean, it's very similar to the prior one. The difference is that we can offset the losses, and only upon the liquidation of the US Corp, you can mitigate the 30%. We can go to the next slide unless there are any questions.
So quick question on this, Olga. So
yeah,
theoretically then, so they create that US corporation, and then from there, a lot of the folks here are working on syndications, and so obviously that normally has its own LLC, and you have the general partners and limited partners are investing, and they create this LLC, which is what owns that asset. So in this case, what the way it would work is that the foreign investors US corporation would create another LLC, would create an LLC, which would then invest in as a passive investor in a syndication. So it's like that way they're protected by that extra level. Is that about right? Did I get it?
Yeah, I mean, in the partnership, I mean, the same, just all of these scenarios, they talk about corporate structures, but a partnership structure would be very similar, right? We have the foreigner who can be, a general partner, can be a limited partner. Usually foreigners are limited partners, right? And there's the US GP. But yes, they would have their own US company. And usually, again, all the US funds, they always require foreigners to come in through some US vehicle, right? So the foreigner would create his own LLC or his own US corporation, or they could come in through a trust. So yes, the structure would be very similar. It just, again, would depend if they just have one investment in the US, then it's just going to be one US LLC, or if they have various investments, depending on the amount and what would be the risk, right? Again, talking about liability issues, potential liability issues, then yes, we would create an LLC per investment.
And you could theoretically create the LLCs as you do additional investing. So say you invest, yeah, so you only create the ones that you need. And if you want to, at that point, you want to, when that LLC is, where that asset is sold, they could theoretically shut off their corporation. And at that point, they would avoid that double taxation.
Exactly, yes. And for foreigners, it's always also important, depending what jurisdiction they come from, But you know, I deal with a lot of Latin Americans, and opening and closing companies there, it's quite of a headache. So when they hear that you can open an LLC in the US in 5 days, and you know, prior to COVID, get a tax ID in also about under a week or under 10 days, it's sort of, you know, big news. So yes, it's very easy to open, close companies, and there's no, you know, all of this is, I mean, this scenario is a hypothetical that we already have 3 properties, right, of 3 investments. But yes, as you go, as there are more investments, yes, you open entities or you close them and sort of get rid of that 30% withholding in this scenario.
Okay, great.
So the last sort of typical structure that I wanted to mention is we have a trust. So we have the foreigner who establishes a trust, and then that trust holds properties, right? So this usually, this works better when we have a family setting that they want to plan for their children, for their spouses. So this is definitely something when the client has long-term investment, because this will obviously protect from estate taxes, so we check that box. There is one level of taxation because the taxpayer here is the trust. It offers the anonymity if it's of an importance to the investor. But there is, you know, the disadvantage, which it depends how you structure the trust. Sometimes foreigners are a little bit, you know, shying away from what is a trust. And some jurisdictions, again, I'm coming back to the Latin American jurisdictions, and some of them trust is a little bit frowned upon. It is perceived, you know, as not as a very kosher structure. So it again sort of depends from client to client and what jurisdiction they come from. But in some cases, this could be a viable option. But it's the big advantage that it's very it's a strong it's a vehicle that strongly protects against estate taxes, and also it helps protect the foreign, or better to say the beneficiaries, from probate, right? Which we all know in the US that if this applies to anybody, to US people as well, is if a US person passes away and there is no trust, there is no, you know, estate planning documents, the beneficiaries have to go through the probate process, which can take months, you know, lots of headache, expenses, court fees, and can take quite some time. So the beneficiaries actually get the title to the property if we talk about real estate. But if you have all of that through a trust, and this applies again to both US and foreigners, if we as US people or as foreigners have it through a trust, upon that, the property automatically goes to the beneficiaries depending what the wishes were in the trust, and there's no need for probate process or to go for court. It just, you know, all happens at the dining table with the trustee, in the presence of the trustee and beneficiaries. So these were sort of, you know, the typical structures that always I come across. And the other one, yes, as Ray mentioned, is the partnership structure, where yes, we have the GP, we have the limited partners, but it would be the same. In a partnership, everything flows to the partners. There's one level of tax, which is very advantageous to the foreigners and to US people for that matter. And it can also offer estate tax protection if it is done as a 2-tier partnership. If we have a foreign partnership which holds a US partnership, it's a little bit more complex structure, and it's a little bit more costly because there's so many partnerships involved. But again, it sort of depends on case to case. And if there are any questions, I'm happy to answer them during this call, or if anybody has, you know, any follow-ups after that, it's a specific scenario, I'm also happy to approach that as well.
I have a quick question, Olga.
Sure.
You are talking about the loss of the loss of control. Could you elaborate a little bit on that?
Yeah, so in a trust, what happens, there are two types of trust, right? There's the revocable trust and the irrevocable trust. Why I mentioned irrevocable trust for foreigner is because if that foreigner has a revocable trust, it's as if he or she holds the assets directly, right? So if he or she passes away, all that property, that U.S. real estate, would be included in his or her estate, so it would be taxed. So the only way to protect from estate tax purposes is to have an irrevocable trust. So what does it mean is that there's a trustee. In that case, the foreigner is not the owner of the property anymore. Who is the owner is the trust. So that is what I mean by loss of control and loss of power. So you know, again, it can be structured as, it all depends who the trustee is. You know, I had clients who were foreigners, but then, you know, their sister was a US person. So they were confident and they were okay with giving control over this property to his or her sister. Right. So that's what I mean by loss of control. Does that clarify?
I'm still a little bit confused, but I feel like there is just so many layers that it takes time to learn about all of these.
No, so a trust, so in irrevocable trust is basically it's a separate structure. So, you know, if let's say if I hold the property and I'm a US person, I can hold it through a revocable trust, Why? Because if something happens to me tomorrow, I have my 11 million exemption for estate tax purposes. So unless I have real estate, which is over that, and any other assets over that, I'm at risk, right? But if I'm a foreigner, remember I mentioned that foreigners only have 60,000 exemption, right? So if I'm a foreigner and I hold this property through a revocable trust and I have control over it and something happens to me tomorrow, there's no estate tax protection, right? So that's why the irrevocable trust is the better option, but the disadvantage could be perceived by some is that I'm not holding it anymore. So if something happens to me tomorrow, it's not my property anymore, it's the property of the trust. And in the trust, I say, you know, I want this property to go to my 2 children and 50-50%, or I want my husband to get it, you know, 25, and then the kids get the rest, whatever the wishes might be. And let's say if my husband is, and I'm a foreigner, and if my husband is US, or if I have an aunt who's US, or I can have a corporate trustee also, right? I mean, there are all the trust companies that can serve as trustees. It's just there, why I say that it's a more complex structure is because there, the corporate trustee, you know, their annual fees. I mean, that's how trust companies make money, right? They have the annual fees. You know, then you have all the headache of the paperwork and the bureaucracy to get anything done. Right, if there's a corporate trustee. So those are a little bit the differences between the revocable and irrevocable trust.
Thank you.
Sure.
I see a question on the chat about what the difference is or similarities for Canadian investors. Are there any advantages?
I mean, we have a tax treaty with Canada, so that's always an advantage. So for example, the withholding that I was mentioning, the 30%, it goes down. I believe it's either 10 or 15%. So that is always an advantage. But otherwise, Canadian would be treated like any other foreigner. But the big advantage is that there's a tax treaty.
So I got a question, Olga. What are the top questions that you get from foreign investors that are, you know, that you work with? What are their biggest concerns, if you will, when, you know, as far as setting stuff up and kind of getting themselves, you know, to make an investment?
Sure. So yes, the first question is always, how am I going to be taxed on this, right? So that's when, you know, I want to invest in this fund. How am I going to be taxed? How much do I need to pay? Right? That's always the most important question. And then, estate tax purposes. What happens to me what happens to my investment if something happens to me, or if they want to pass it on to their children. Sometimes foreign investors, especially here in Florida, a lot of the children of the foreign families go to school here, or they are already U.S. citizens in a lot of cases. So there's always that sort of mix of, I'm a foreigner, but my kids are U.S. How do I, juggle all of this? And then, of course, how do you, in terms of, it's important to always tell foreigners that setting up companies in the U.S. and setting up structures is very easy. And I would like to stress that again, because if you guys, if anybody has foreign investors, specifically from Latin American jurisdictions, they will tell you that, I repeat myself, but, opening and closing companies can take months and even years. Like in Brazil, for example, it's beyond complicated and difficult to close a company. So sometimes they feel afraid of investing, thinking that, oh, I have to go through the whole process of setting up a structure in the US, which is very easy and very quickly.
I have a question.
Sure.
Are there any advantages or disadvantages to using like a DST structure for a foreign investor?
I'm sorry?
I said, are there any advantages or disadvantages to using a DST structure? And DST, Delaware Statutory Trust.
All right. I mean, just again, so when it comes to Delaware, all foreigners know that that's great for anonymity purposes. So we just go back to the same, explaining to foreigners the trust, and depending what jurisdiction they come from, it can be perceived as, a tax haven. In a lot of Latin jurisdictions, that is perceived that way. So it kind of depends to explain and what will be the amount of investment, if it's worth it, right? Because you need to have a corporate trustee maybe. So there are advantages, right? Again, the estate tax protection, the anonymity, but it would depend on the specific scenario.
Okay.
Olga, I'm going to push back to, I think one of your slides has your contact information, I believe, in
Sure.
case anybody wants to take that down, because I know what I do. I mean, obviously, it's good to know some of this stuff, but it's always good to be able to refer an investor that you're working with to someone like you that could really walk that individual through all of the steps and basically get it to the point where they're ready to invest. And that would be the ideal way for me, right? Not really going through that process, but having an idea is always useful. But I think this is another way that potentially, if you're working with someone and they have questions, you can kind of give them a very basic scenario, but I would more than likely just say, talk to an expert, talk to somebody who does this for a living, and that would be very helpful, I think.
Yeah.
So that's a great service.
No, I appreciate it. Yes, and it's also important. Foreigners, they also, or any client for that matter, they like that one-stop shop, right? I come to an advisor, or I come to somebody and I want the full service, advise me, and then, can you maintain my structure? So I offer, guidance with how to set it up. Then I implement the structure, and then I also offer accounting and tax preparation services. So that is always important for clients to sort of from, A to Z. And if they have any questions throughout the process, I'm always there along the way.
Excellent. Any other questions? All right, Olga. Well, thank you very much. It's very useful. This has been recorded. Yeah, no, my pleasure. I'm going to post this for those people, because I know there were a lot of people that, they messaged me and said, hey, I can't make it, but, is this going to be available? So that'll be posted on my YouTube channel, and I'll send that out to everyone who had an invite to this. So that way you can have it as well. So I really appreciate it, Olga.
Well, thank you everybody for listening, and I hope it was informative. Thank you so much. And Ray, thanks for having me.
My pleasure. All right, well, that was good. That's got some good information there to use. Always good to have different aspects of this business, at least some general knowledge. And so this is just another angle. We've had some lenders in here before. I think we'll do that again. Interest rates seem to be going up, Omar. I don't know about that.
We're climbing a little bit here.
Yes, hopefully not too much. I know that one of the other things, obviously, at the end of the year, like we're coming up to, one of the big things that come up is, what is the state of the economy, right? And so one of the things I'm trying to do for the next meetup, which will be on the December 21st, is to have somebody talk about Orlando and the greater Central Florida, because there have been some issues here with, of course, with COVID really impacting the parks and some of the tourism aspects of the city. But this city is much bigger than just tourism. So it'd be good to have somebody to come and talk to us about what they're seeing and what they sort of are projecting going forward onto next year. And so, and sort of tie that into residential real estate in some way. So that's coming up. That'll be December 21st again. And that's really close to Christmas, but hopefully we'll get some people in there. And if not, obviously it'll be recorded. So what I'd like to do now is I'd like to kind of open it up back again to see if some people have something they want to announce, because part of this is also giving others an opportunity to sort of talk about some of the things that they're doing, that they're working on. Obviously, if you're working on a deal, there may be some things you can and can't say, so be aware of that. I know we are, but maybe you've got a podcast. And I know I was recently on a podcast with a good friend of mine, Martha. I don't know, Martha, if you want to talk a little bit about that? Sorry to put you on the spot, but I'm giving you a second to get your thoughts together here.
Oh, no, that's great. Thank you. Yes, I just started a podcast. It's called For the Love of Women. It's the number 4, the love, L-U-V, of women. And we have Ray on. It's all about helping with advice for women. So if you have a chance, check it out. It's on all of the, Apple and all of the mainstream podcasting. So it's my newest project. Thanks, Ray. I appreciate that. Yours will be coming out very soon. We're working on it.
No, thank you. No, it is really fantastic. I was a little bit heartbroken that I couldn't join your Facebook group, but I understand it's for women, so that's fine. But so no, it's good. But I mean, some of the stuff, because I haven't had a chance to listen in on some of your previous work, and it's really useful, and it's not just really useful for just women. So congratulations on that. I'd like to hear more.
Thank
I'm
you.
sorry,
Thank you.
What's the name of your podcast?
4, the number 4, the L-U-V of women. So For the Love of Women, but a play on words, L-U-V instead of love.
I love it.
But it is very useful information to anyone. We just kind of, we closed the Facebook group for women only. So if any of the ladies want to join, or your spouses. And the reason for that is because, so my partner is a nurse practitioner, and we want to have a group where women can ask, medical questions without feeling kind of pressured, with men being in the group. However, the podcast and the blog, which we're still working on the blog publishing, but the podcast is live, and it's for everyone, of course.
Awesome. Who else has got something going on that they want to announce? I know there's always some folks that have other podcasts that are of interest and other things. So if you published a book or anything like that, anybody else have something they want to announce? Pretty quiet today, pretty quiet. Well, I tell you, I can't go into too much detail, but I know I've had a couple of best and finals this month. I'm hoping we can get beyond that, but it's kind of the nature of the beast here. So it's always good to continue to push forward. I didn't let you know, first of all, there's some markets that COVID didn't do much to. I mean, it was like a blip on the radar, and then it's back to normal, you know, almost. And I know we just had today our second announcement of a vaccine, potential vaccine. So things are looking up. Doesn't mean we're out of the woods just yet, but I think there's always, you can see the light at the end of the tunnel at this point. So always good there. So I just say, keep looking for deals, because there's a lot of folks that are kind of sitting on the sidelines, and they're going to miss out a little bit. And, you know, waiting for residential prices to go down may be a long time before supply catches up with demand. So it's going to be tough for prices just come down just arbitrarily. So anybody else, anything? All right, well then I'll stick around in case anybody wants to do some networking offline, you know, so it'll be open. But if you guys have to go, it has been an hour on the dot, so that's cool. And again, Olga, thanks again. I'm looking forward to looking at this and kind of looking at it without having to click slides and do that. So I need to learn this a little bit better too. So I'm looking forward to reading it again.
Thank you so much, Reagan. Thank you.
No, absolutely. All right. Well, good night, everyone. And then we'll see if anybody sticks around.
Good night. Thank you for having this.